All right, so thank you for joining us for today's MicroH Talks Technology webinar. The topic of today's conversation is cyber insurance, which can be a complex subject and sometimes difficult to navigate for businesses and organizations of all sizes. So my name is Maria Fiore. I'm the Director of Operations here at MicroH, and I'm joined today by our guest presenter and cyber insurance expert, Wesley Robinson. He's a risk advisor at Iridium, and Sergio Lima, who's Director of Customer Success at MicroH, to talk about the IT side of this conversation. So welcome, gentlemen.
Thank you.
Thanks for having us.
Hello.
So just before we begin, a few housekeeping notes. As you probably noticed, all attendees are muted, mainly to reduce the background noise. We have two experts with us today, so we encourage you to ask questions throughout the presentation by using the questions panel, which of the webinar tool, which is usually found on the right-hand side of the tool. Wesley and Sergio will answer them as we go along. And lastly, we are recording the webinar, and the webinar or the recording will be sent to you later today for your review or to share with people you think would benefit from listening in. In the same email, you'll also find a link to download the guide that we are making available for you today. So I guess just before handing this over to Wesley and Sergio, I'll just take a moment to give a brief overview of MicroH. So we have 39 locations across Canada, which makes us one of the largest networks of IT experts in the country. We have been in business for 41 years, providing IT services and solutions to our clients. There is no doubt that we have a passion for technology, but our true passion is helping our clients achieve the results they are looking for by using the right technology for their business. That's what we really love to do. We have a simple approach. We have teams of professionals like Sergio who work with you to understand your business, your opportunities and challenges, and your goals so that they can recommend and provide the services and solutions you need to achieve the business results you want. That's really our why. So with that, I will pass the baton, as they say, to Wesley. So Wesley, just give me a minute and I will put up the presentation. Sorry, right the person here. And share the right screen, hopefully. You guys seeing that?
Yep.
Yep.
Yes.
Yeah, absolutely.
Excellent.
No, thank you, Maria. I appreciate the introduction. I appreciate the chance to be here today. I think speaking about cyber risk from an insurance perspective, it's interesting how the value propositions align with an IT provider like MicroH. I mean, ultimately, what we're trying to do at Iridium is the same thing. We're trying to use risk management as a tool for your business, just as another tool to accelerate your business. And cyber risk is a big piece of that, right? These are potentially business-ending risks if not insured properly, if not addressed properly. And so IT and insurance, when it comes to cyber, kind of go hand in hand. If we go to the next slide here, Maria, we'll just talk about the agenda for what we're going to talk about today quickly. This is what we're going to kind of break this up into, because I think this is the way we do things at Iridium. The way you should be looking at cyber insurance is talking about the exposure first, and then handling the policy and the wordings and the actual insurance later. So, talking about what your exposure is, what the trends are that your businesses face, and then handling the insurance kind of the last step in the process. Ultimately, I think that's how risk management should be done. That's how insurance should be done. Not every broker will do it like that, but I think that should be your MO. And if that's not the way it's being done for cyber specifically, I think it can be problematic. If we go to the next slide here. So this is what businesses are facing in 2022. When we talk about cybercrime as risk management professionals and as business owners, this is ultimately what we're talking about. These are the trends. This is what your business has to contend with. First and foremost, I know everyone's sick of talking about the pandemic and the coronavirus, but ultimately it was a very difficult time for IT groups and for operational technology groups, because ultimately the fact that we had to go to a work from home environment overnight was a very difficult transition for a lot of companies. It's a transition that usually you would take months to implement, and doing it in a handful of days criminals took note. And so we saw that cybercrime and criminal activity increased 600% over the pandemic. And, they're targeting things like Microsoft Exchange, Cassia, SolarWinds, so these bigger vendors where in one go you can get hundreds of companies and you can really take one vulnerability and take advantage of it across a lot of industries and a lot of companies. Another key trend that we're dealing with right now is this Russia-Ukraine conflict. Probably something else that people are sick of hearing about, but I think it's interesting to see how, a lot of these state-sponsored hacking entities like the Russian groups, they will indiscriminately target companies and try to cause as much chaos as possible. They're not as much in it for the money as they would be in it for causing chaos in NATO countries. And so Canada falls into that boat. Unfortunately, we can be targeted indiscriminately just for our support of Ukraine. As well, you can have these conduit injuries from viruses spreading through Europe into North American systems, into North American networks. So I think it's something to contend with. Insurance companies are definitely weary of what's going on right now, and they're weary of the conflict and the uncertainty around it. So, it's something to consider. Your business is affected by these larger global trends, whether we like it or not. Just a fun stat there, I guess, when it comes to the cybercrime industry, is that it's projected to cost the global economy $10.5 trillion by 2025. This is more lucrative than the global trade of all major illegal drugs combined. So all cartel activity, cannabis, heroin, fentanyl, meth. I mean, that's everything combined. And I think what this stat is really pointing to is the fact that this is a very lucrative industry. Most of these cyber criminals and these ransomware gangs are in it truly for the money, right? It is good money to be a ransomware gang. It's often better money than being on the legitimate side of the industry. So, that's a dangerous trend. Hopefully we can start to reverse that in the coming years.
Well, they have ransomware as a service now. They're offering like business, models that you can use, right? So crazy.
Yeah, it's a good point. I mean, they do operate very much like businesses, right? They have customer support. They have the
accounting department.
Like you said, yeah. So they're taking a lot of notes from, I think, normal businesses, and they're scaling up accordingly. So, and then just to run through the rest of the slide, I think the key points here are really that in the insurance industry, we like to talk about frequency and severity of incidents, and you like to ensure the high severity, low frequency events, right? The difficulty with cyber risk is that it is becoming a high frequency, high severity event. We have the attacks on the rise and the success increasing of the criminals. The criminals have gotten better at what they do, and they're also doing it more, and there's more of them, which is a difficult hurdle for the insurance industry to look at. It's difficult to price that, and that's, I think, why we're talking about it so much to clients now. I think that's why we have webinars like this, why clients are struggling with the coverage. And then at the end of the day,
sorry, Wesley. One of the things that came up too earlier was, before they'd come in, they'd encrypt your data. They'd say, give me, a sum of money, and they go away. Now they sit there and check what data might be worth more money, and they can ask for more money, right? So that's influencing things as well.
Yeah. And I mean, these criminals, them being smarter, kind of it plays to that fact, right? The fact that they're in your system, they're reading your financial statements, they know how much you're willing to pay, they know how much would hurt you as a company, and kind of what the pain threshold there is when it comes to ransomware. And then at the end of the day, this is the problem with this is that human error is the most difficult thing to protect against. You are effectively trying to run your business as effectively as possible and efficiently as possible, and not ring fencing your employees too much, but they are the biggest conduit for these cyber attacks and these injuries. So it's a difficult problem from an IT perspective. I don't envy IT professionals right now, but I do work with a lot of them in this game. We can go to the next slide here, Maria. So this stat is just pointing to the fact that we're talking about Canada right now, and Canada right now is the third worst region to have a cyber data breach in. We're right behind the US. The US leads this category by a significant margin. And then the Middle East is after that, and then Canada is third in line. And there's a couple of factors that play into this. For one, Canada has very strict data and privacy regulations. So going through a data breach with the government and hiring the lawyers to do that can be quite expensive. As well, Canadians we're hooked up to these networks. We have been for years. We're kind of right there with the US. Businesses in Canada don't run without these networks. They don't run without these systems. We're more connected than ever with the Internet of Things and everything that we do. And so, it just goes to show that there's a larger footprint in Canada to target for criminals. And so we're kind of right there with the US. We get thrown in with the US a lot as one of the worst places to have to try to address this risk and insure it as well. So it's not a great, I don't want to be the boogeyman here. And I think there's a lot of good stories as we get further on in this presentation, but I do like this stat. It's an interesting number. And it just goes to show kind of where that average cost is at 5.4 million. That's potentially a business ending risk for a data breach. We can go to the next one here, Maria. And then for everyone on the call, this is just another stat as far as where the costs lay out per industry. So, you'll see there's some very interesting numbers here, 2020 versus 2021, where certain industries, their cost of a data breach really skyrocketed in 2021. And I think a lot of this is that these cyber criminals will be very smart about the industries they target. So, during the COVID pandemic, you'll see healthcare's data breach costs really went up. And I think it's because they know healthcare was the most essential and talked about thing. So if you could shut down a hospital per se, or you could shut down a hospital network, they don't really have a choice. They are going to pay you the ransom. They're not going to negotiate with you. This is life-saving infrastructure. And I think, the criminals that are in it for the money and the criminals that are in it for the chaos, they both do this, right? They both hit these industries that they know are essential and that they know don't have the time to negotiate with them, right? And don't have the time to try to rely on their backups as much. So, it's a telling statistic. It is a bit depressing that healthcare had such a jump in 2021. Obviously, it's not ideal, but these are criminals at the end of the day, and the ones who are, like I said, the ones who are in it for the money and the ones who are in it for the chaos, both do this. So whether they're state-sponsored Russian hackers or whether they're just in it for the money, they know that the money is in these industries that are essential. And I mean, for everyone on this call, I'm sure you'll look at where your industry is at on there and kind of see where the trends were. There's obviously a couple that went down in 2021. I would say that's a bit of an anomaly. Obviously, this is an average total cost. In the aggregate, these costs are just going up and up. So if this is put on more of a 5-year scale, you'll see that these costs have exponentially grown in 5 years. There's a couple of anomalies, like, yeah.
There's an interesting view in this graph, Wesley. It looks like I guess from the transportation and going all the way to the left in 2020 was relatively low, and now every single industry has become almost equal. So, food for thought. Nobody is immune to this type of attack. It looks like everybody's being hit with it.
Yeah, and I mean, what's interesting as well, so even on the low end of this, the public sector side,
it's gone
up significantly.
Yeah.
And what criminals will do with public sector, so government entities, they will ask for less money because they know it's taxpayer money. They know the government will think harder about it, but they'll hit them more often. So this graph doesn't say anything about the frequency. And public sector is a very difficult place for insurance right now when it comes to cyber because of the frequency. So yeah, the claim amount is smaller, but they are getting hit more often. They also have less money to spend on controls.
That's right. That's right.
Lower hanging fruit often. Yeah, it's a difficult space for them for sure. Once again, risk managers in the public sector, this is a difficult risk for them. We can go to the next slide, Maria. So when we talk about the losses that face companies, we were talking about the stats there and very broadly talking about cyber risk as kind of a buzzword, but to get a bit more granular and actually talk about these are the losses that face companies. These are the costs you end up paying in the case of a breach or an incident. We're talking about loss of valuable data. This could be your trade secrets, your intellectual property. You could be getting sued for losing vendor data here. You know, that's a very common thing, losing valuable vendor trade secrets or vendor payment details. You know, that is quite common. It's the liability that arises from that attack. Of course, extortion, so the threat of destruction of your data. So this is the ransomware, classic ransomware claims where the criminals have encrypted all the data on your networks and now are asking for a ransom to unencrypt it. As we kind of said before, these types of claims run very much like businesses. You know, they have customer support lines, they have websites that you can go to and pay the ransom right there in Bitcoin or Ethereum or whatever cryptocurrency they choose usually. And it's incredible to see these claims play out because they do play out very much like just a transaction, right? They're not usually there to harm your company per se. They just want the money, which obviously harms your company. And then business interruption. So this is more the revenue loss and the net income that your company can lose from being down for a period of time. This one will very much depend on your industry. So if you're if you're in the retail sector and you actually have to shut down stores like Target had to for your Sony, and you actually have to shut down your platform for a while, those hours and those days that you're down, that's the revenue loss you're experiencing, and that can be very, very significant. It also puts the timer on the negotiation process, right? So when the criminals know they've locked up your systems, they know you're losing revenue. You obviously have less time now to negotiate with them because you just want to get your data back. You want to get your systems unencrypted and continue on with business as usual. And they know that, right? So they're less likely to negotiate if they know you're losing a lot of money on the revenue side. Loss of personal information. So this is more of the employee kind of privacy regulation standpoint. And this one very much depends on what province you're in, as well as what countries you operate in. So if you have European employees, you're now subject to European regulations, and you have to go through that whole process. If you have US employees, each state has different regulations. You have to report differently to each regulator. It can be an incredibly arduous process, and the regulators can also be a little bit, you know, generic in how they coach you to do this, right? So there's whole legal teams that work with clients to walk them through these processes and make sure that they do it right. Because in Canada, you know, you can be fined up to $100,000 if the regulator deems that you did this incorrectly or that you should have done something that you didn't do. And they're not very good at guiding you on how to do it right. So they'll just, instead of guiding you on the upfront side, they'll just fine you after it's done, which can be a frustrating process. So the legal fees are usually what really ramp up the cost when it comes to privacy regulations. Loss of reputation. So this is a couple different things. I mean, this could be your vendors not wanting to work with you anymore, your customers, you know, wanting to drop you after this happening, because you know you haven't kept their data properly, or you've leaked trade secrets about them because of this attack. You know, for public companies, this can mean a big drop in the stock market. You know, this could mean an actual share price drop, and this is something your directors and officers have to be concerned about as members of the board. So those kind of claims can mean a whole bunch of different things, but they're not a lot of fun, especially if you're a public company. And then
Even in SMBs though, right? You lose the trust of your customers. That's not a good place to be, right?
Yeah, the biggest thing we usually see here is the lost customer problem, right? So they will go somewhere else, especially if it's, you know, if your industry is fairly commoditized, or if there is a competitor that obviously didn't have this claim. You know, that can be the hardest thing. It's the hardest thing to come back from as well. So yeah, and then physical damage. So, you know, this is for the manufacturers out there, the energy companies. This is where, you know, we focus a lot on this one because it's a completely different risk, right? Industrial control systems, things that govern pipelines and manufacturing facilities and food processing plants. You know, these were systems that were never meant to be hooked up to the internet usually, and then were done so after the fact as an afterthought for convenience. So the problem with convenience in the cyberspace is that it means that usually they're not the most secure systems, and they're not the most protected systems. So hackers can do a lot with those systems. You know, they can open and close valves, they can change pressure. They can cause damage and cause a lot of hurt for your company. So it's a completely different, side of the risk, but it's actually becoming a lot more common as kind of global insecurity continues on. And then financial losses. So this is, your classic social engineering, where you don't even have to have the hack on your system for this to happen. You just paid the wrong vendor. Maybe it's because your vendor got hacked and they've been sending emails from their payroll department or their, accounts receivable department. That's not necessarily your problem as a company, but it is, because it's your money out the door. And when they follow up in a month for payment again, it's going to be your problem because that money's already offshore and you're going to have to pay them again. So this is another thing that arises a lot. These criminals are smart. They're concerned about data and money. So they'll often try to hit both when they do this. We can go to the next slide here, Maria.
There you go.
Yep. Okay, so those are the possible losses. Now, just to sort of split it out into what does a cyber policy from an insurance perspective cover? And the long story short here is that it basically covers a lot of what we just talked about, aside from maybe the financial losses sometimes, which is a different product, and the physical damage, which is also a different product. And I think working with a proper risk management specialist really does give you the insight into how to properly manage this risk and which ones you're going to insure and which ones you don't. But when we just talk about data and we just talk about cyber risk, this is how the policy is laid out. You have your coverage for third-party claims against you. So basically alleged claims that you've been hacked, you've failed to protect our data. This includes going through the regulatory process with the government, as well as any payment card industry assessments you have to go through, which are expensive and long and arduous processes. So anyone who's been through one can attest to that, and can attest that they probably never want to go through it again. And then from the event management perspective, so the insurance is also covering you for all of your IT, crisis consulting, anything that you've paid into a consultant to manage the incident, and to even go so far as to negotiate with the criminals. These legal teams and these cyber forensics teams will they'll get online with these criminals, they'll negotiate the ransom payment, they'll try to get it down, and they'll know who you can negotiate with and who you can't. That's how often they do this, right? They know the groups that will get mad and get pissed off and just leak your data, and they know the groups that are more business oriented and that can be negotiated with. So the fact that they know that, and the fact that they're doing it so much, just kind of speaks to the fact that this industry does have a bit of an issue with how often it's happening. And this can include, if you are a retail operation or if you're holding a lot of personal data, this can include your credit monitoring for your breach victims. That was a big problem in the Desjardins claim. When Desjardins was breached, they had to open up a call center and they had to pay for credit monitoring for every potential customer that might have had their identity compromised. And in the case of that claim as well, that was a rogue employee. That wasn't even the criminal aspect. That's a rogue employee that was fired and leaked that on the way out, which is another concern as a business, is how you're protecting your employees and keeping them from doing these kind of things. And then we already talked about net income loss and extra expenses. So that's your network BI piece. Cyber extortion. The key thing to know about cyber extortion from an insurance perspective is that it's up to you as the company whether you pay the ransom or not. The insurance company does not choose whether you pay the ransom. They just coach you. They guide you in the process. And I think that's key to understand, that your insurance company and your broker in this space are on your side. They're trying to get you to pay the lowest ransom possible, or if possible, rely on your backups and not pay a ransom at all. But ultimately, it is up to you as the company of whether you pay it right away and try to move on with your life. And then contingent loss, this really drives home the fact that as business owners, we know that you outsource a lot of your IT. You outsource it to companies like MicroAge who do it well. You outsource it to these managed service providers. You use Amazon Web Services, you use Google Cloud, you use Microsoft Exchange, obviously. So when those outsourced service providers, or if they have an event, if Amazon Web Services is hacked and your data is breached from the cloud, you are still the data owner as that business, and you're still on the hook for that loss. The regulators have made it very clear that they're not going to hold Amazon Web Services accountable for that. it's your data. Where you store it is up to you ultimately, and you're responsible for it getting out there. And so that's an interesting point, because, you know, a lot of business owners will come to us and say, well, we should be fine because we outsource all this, and, you know, Amazon's going to be there for us if anything happens. And, you know, the resounding answer we have to kind of break to them is that no, they won't. And the regulator also doesn't care where it is. You are the owner of it and you're responsible for it.
Well, these, you know, we know, like you say, AWS, like Microsoft, that they have that shared responsibility model, right? Their responsibility is to make sure that whatever you're putting your data into is well managed and is safe and secure and all of that stuff. But they have zero responsibility for your data.
Yeah, 100%.
I still don't know why they call it shared responsibility, because 90% of it lies on us and customers, and not the service providers and cloud providers. It's just strange.
It sounds good, doesn't it, though?
Yeah,
Shared
exactly.
responsibility.
Wesley, to be clear on certain things, the policy coverage does cover, like in the event management, the legal, the ability to resolve the problem, fix it, and bring it back, bring the business back up with whatever we can. But it doesn't include things like, well, you know, we noticed you didn't have 2FA and you didn't have the adequate firewall in place, and you don't have this, you know, anti-spam feature in place. These are all things that are outside of the scope of the coverage, right? Which obviously the company has to eventually invest in to put that in place.
Yeah,
right?
and it's a good point. Actually, this segues quite well. So if you go to the next slide, so we're gonna, if you talk about the actual exclusions, I know when we talk about insurance, everyone wants to know, that's great, you know,
What's excluded?
What won't you pay, right?
what's excluded. Yeah, so, you know, that's
Yeah.
great. Yeah, you're talking big game about what's covered, but what is excluded. So, you know, one of these typical exclusions is the upgrades to your system. You know, and a really key principle is in insurance is that insurance companies are not there to upgrade or make your business better after the loss. They're there to try to get you back to where you were before the loss, try to get you back to ground zero, you know, the day of the ransomware attack, get you back to that section, you know. And then any additional costs to actually upgrade your system and redesign it or reconfigure it to make it more secure, that's where they're going to split out those costs and not cover them. You know, there is insurance companies that have come out and said, we want to make you a better risk as a client, and that we will give you, you know, we'll give you premium back for doing these things. So it's something to explore with your broker. I mean, those exist, like those policy credits exist. You can get premium back for doing certain things sometimes. You know, insurance companies have a vested interest in your business being secure, obviously, because when it's not, they're the ones paying the claim. That's their balance sheet that they're trying to protect. So they do have some skin in the game. They want you to be a better business, and they will often help you pay for it or give you a credit for doing these things, you know, like multi-factor authentication, everything you just talked about pretty much. I'm not going to talk too much about a lot of these exclusions. A lot of them are very standard, I'd say, insurance policy exclusions. So like willful, deliberate, fraudulent acts by an employee. What I will say is that there is a carve back for that. I mean, the Desjardins claim, that was a willful, deliberate, and fraudulent act by the employee. That was still covered. There's kind of a carve back for these acts, these rogue employees. You know, there's a carve back for those types of claims. So it can be quite nuanced. And I think having a partner that really knows the wordings and understands what's covered and what's not is really key here. One thing also that I will point out is that the fines, penalties piece and the punitive damages, that's also typically excluded. A lot of companies though can also offer it. So they can offer it if the government decides that you did this poorly and you didn't, you know, go through the process properly, they can fine you. That's a $100,000 max fine in Alberta, and that extends across most provinces. They can fine you, and you can actually cover that through insurance. Insurance companies don't like to do it, but they will do it if you ask them to cover it, and if you get the right wording. So you just need to understand, you know, not all these policies are built equally. Far from it, I'd say. There is a lot of variation in the cyber insurance world. So you need to have a partner that understands, you know, these prices are not how you should be comparing cyber insurance, you know, because they are not all the same, and the product you're buying can be radically different whether you're going with one carrier or another. I think the only other one that I would point out here would be this war and terrorism piece. A very difficult exclusion to actually prove. They basically have to prove that this was an act of war as the insurance company, or that they have to prove that this was a terrorist attack. Most of these ransomware groups, most of these cyber criminal gangs, yes, they're in Russia, they're in China, but they're pinging their IPs around, and they're not making it clear where they're from. So because most of them are in it for the money, and the Russian government's in it for the money, it's very difficult to actually use that exclusion. I've honestly never seen it get used, even though we knew with a lot of clients that these were Russian hackers, these were Chinese hackers. I've never seen an insurance company even try to use it. So it's just a key thing to know, honestly. And it is interesting because they will do a sanction, like the insurance company will do a sanctions check before they pay the ransom. So if people are familiar with that concept, a sanctions check is basically to check whether the entity they're paying is on any sanctioned list from the Canadian or the US government. And they'll do those checks, and I've never seen a check come back positive, which is kind of crazy because we know very well that these are Russian hackers, these are Chinese hackers. They just hide it well. So it doesn't officially show up. The lawyers can check the box and say, yeah, we did the check, we're fine, let's pay the ransom. But it's interesting because we know we know that is the Russian government, just by a different name. So we can go to the next slide here, I think. And then I think just this, this drives home some of the points around, these are the policy coverage and these are some typical claim amounts. So in Canada, I think average cost of a breach in 2021, that number went up a little bit to 5 million. But in 2021, it was 4.24 million. That's an IBM statistic. And then if it's a ransomware claim, that cost goes up a little bit. And the difference there, I think, is actually the cost of the ransom itself. It's paying the ransom, on top of all these other things you are paying, like crisis services, legal guidance, forensics costs. Business interruption is actually one of the biggest costs in these claims. So every day, every week you're down, that net income loss hits businesses hard. And it's something that, should be seriously considered when you're buying the insurance. Is if we were down for 2 weeks, how much revenue would we lose? How much would we pay in a ransomware claim? And go from there. I think the other thing to point out here is on the ransomware side of things, that the cost of the payment has really skyrocketed. And that's for a whole bunch of different reasons. I mean, the cyber criminals have gotten a lot smarter, and I think that's why. That they're looking into your financial statements, they're looking into what you can afford to pay, and they're asking for that amount. Whereas previously they used to hit hundreds of companies at once, and they would ask every company for 20 grand, right? And those that would hit the small guys, that would hit the big guys. The big guys would pay the 20 grand and say that was a deal, let's move on. The small guys would hurt a little bit more. Now they're looking at it and they're hitting the small guys, they're asking for 20 grand, but they're asking the big guys for millions. They're saying, Garmin is probably the best example of this. That's a company in Alberta that offers GPS systems, and it's undisclosed, but that ransomware claim was supposed to be a $10 million payment, is what that's alleged to be, and it's because they knew Garmin could afford it. So they know what you can afford, and they will try to hit that point for ransomware.
Well, at 287 days before you find something in your network and fix it, I think they have the luxury of time on their hands. They'll just wait and collect whatever info they can, I guess.
Yeah, they've done the research, so yeah. It's a good point. If we go to the next slide here, this next slide just breaks down the costs by categories. Go to the next, right there.
Yeah, sorry about that.
So, this is just a good infograph to show in that average cost globally, where do the costs split out? So the lost business cost, I think, is the one to really point out here. That's almost 40% of that number, that 4.24 million globally, is lost business. It's net income loss, it's revenue loss. That's a big number for companies. They need to worry about the fact that after a cyber claim, it's not like a lot of other insurance claims. Your company might not be the same after it. You may have lost those customers for good if not managed and coordinated properly with your customers. There's some messaging that needs to happen when you've had an incident about what you've done to fix the problem, and how you've protected their data moving forward. Otherwise, that business cost can drag on into the years, and it can end businesses. So it's something I think from a board level and from a business owner level to really be aware of, that this is a business ending risk for people, and it's something that they need to understand what that looks like for them. And then, yeah, the detection escalation, that's a lot of the lawyers, that's a lot of the crisis response people. Same with the post-breach response costs. They just split it out by category. So detection would be more your cyber forensics work. Post-breach response costs, a lot of that is lawyer fees, legal fees. The lawyers that do cyber privacy, they're kind of few and far between. And the ones who do it kind of specialize in it, and they charge a pretty hefty rate to do so. And you can't really blame them. It is complicated what they do. There's a lot of different regulatory environments they need to know. So I think the key thing to note from an insurance perspective is that it's far more affordable to access these groups and these companies through an insurance policy, because the insurance companies are getting bulk discount rates with these law firms. Whereas if you tried to call up Norton Rose tomorrow, or Blake's, or BLG, or any of these companies, and just said, I've had a breach, can your guy walk me through this? They would probably say, for one, we're way too busy, we can't. You needed to have us on retainer previously. Or they would say, yeah, you can for sure, but you're going to pay 3 times the hourly rate of what the insurance company would pay. So it's another key thing to consider when keeping costs down in these claims. Breach response, if we go to the next slide here, Maria. This slide is just really pointing out that when you're talking about this product, you're talking about cyber insurance in general, this is what you should be looking for in an insurance provider is the instant response. How good is that instant response? How much experience do they have handling claims? How much experience does your broker have with cyber risk, right? I mean, are they a specialist in this? Are they just a generalist that has to talk about this to kind of cover their ass against claims in the case of it actually happening? You need a provider in this space that's going to be there 24/7. That's going to be there when the claim happens, if the claim happens, to receive that notification right away, get that triage set up, and start to appoint vendors to do the work. Get those lawyers on the phone, get them to determine the scope of the incident and see whether or not you need to pay, the ransom, or you need to set up a call center, or you need to do all these things. Some of the insights here really are that when the response is good, when the response to these claims is really good, companies save millions of dollars in the overall costs. So when the response is not so good and the vendors they use are not experienced, they're not so good at, they don't have the wherewithal to handle the claim, the costs just skyrocket. We've seen incidences where a company kept it to themselves, tried to do the instant response themselves, and ended up, paying a ransom twice, just because they didn't have the expertise to know that particular ransomware group wouldn't probably give them the encryption keys when they paid the ransom the first time. Whereas the experts will know that because they've dealt with that group hundreds of times. They know what they're known for. That's kind of their MO. And they know like I said, they know who they can negotiate and they know who they can't negotiate with. So that company doubled the cost of their claim just by not getting the right vendors and partners involved. So if we go to the next slide as well, that's what you're looking for in a insurance provider. This is what an insurance provider is looking for in you, in your company. These are all the things, obviously, that your IT teams and MicroAge are probably bringing up quite a bit. And this is kind of the cybersecurity hygiene requirements for a lot of cyber underwriting. So when the underwriter sees your risk, they want to see that these 6 things are check boxes and that you have a solution in place, or you have a very good reason why the solution is not in place. More and more so, like, cyber insurance is not really a right for companies. We've seen cyber insurance companies really step away from writing everything and saying, we are going to pick the best in class risks, and we're going to manage our own exposure to this industry by picking the ones that are doing these things, that have the proper patching cadence, that have implemented multi-factor authentication, that train their employees to try to reduce that human error, that have thought about their backups and how they're segregated from their network and how their backups are done and how often, and can they rely on them in the case of a ransomware claim. And then, things like an incident response plan, like I said before, having done these tabletop exercises and then seeing the claims that happen after them with clients, the companies that have an incident response plan and that have tested it fare far better in the case of a claim. Their costs just come way down because they know who to call, they know what to do next, and it's less of a panic. They know what the next steps are. Whereas
it's hard to make a decision when your hair's on fire, right?
Yeah, for sure. Yeah, and it's a lot of you're right. It's hard to make a decision when your hair is on fire, and ultimately as well, the ones who don't have an incident response plan that's even saved offline, so saved off the network, that can be a big issue because if it's saved on your network and now your network is encrypted, if you don't remember it,
yeah, you're not going to memorize 10 pages worth of stuff or phone numbers or emails or whatever.
If the criminals saw it in there, it's probably the first thing they either encrypted or deleted and just said, let's make sure they can't access this. So it's all things to consider in the case of these claims. And like I said, they really bring the cost down. If you have the proper cyber hygiene and you have the proper wherewithal to kind of test these plans, I think it really brings your costs down. And ultimately, if you're working with a risk management partner that is not focusing on the controls first, they're probably doing you a disservice, honestly, because we can approach 30 or 40 different insurance companies and have them all say, we don't want to write your risk, and then say, oh, no one wants to write no one wants to give you cyber insurance. That's the easy thing to do as a broker. That's not hard to do. That's a template email. You can just send that to 40 different underwriters and they will decline it. A real risk management partner will sit down with you first, look at the application and say, let's address these prior to trying to get you a quote, right? Let's talk about these things. Let's try to put these in place if we can. And then we'll get you better pricing as a result. We'll probably get you the product at a more robust pricing and better coverage. As opposed to just getting as many no's as possible and saying, it's too hard, we can't do it.
Yeah, that's the exact exercise we do on a regular basis with some of our customers when they're applying for cyber insurance. They speak to the insurance company and try and work things through. And obviously there's requirements, minimum requirements. And, it's funny to see that two different industries, IT and insurance, are not talking the same language in cybersecurity, because the minimum requirements that you see on this page, by the way, everyone take a mental picture, because when I show you the slide of recommendations we've been saying for the past many years are similar, actually identical. So you'll notice why we've been preaching these for the past many years. It's because a lot of industries now are enforcing a minimum security across the board.
Yeah, well, and I think what's interesting about this is that if you work in for example, if your company is an oil and gas company, the government for years has been telling you the minimum regulations you need to be an oil and gas company, or to be a healthcare provider, or to be a retail provider. The thing is, nothing exists like that for cybersecurity. It is all just industry mandated right now. And so it's interesting because the insurance industry, the risk management industry, and then the MSP space, so microagent space, that's who's really creating these lists now and creating those minimum standards, because the government hasn't, and no one stepped in to say this is what you need to have to be a company. So it's access to capital at the end of the day. If you need to take care of your business, and insurance is all about access to capital and protecting your business. So if you don't have these things in place, it's probably a bigger issue than just you can't buy insurance. There's other business risks there that are problematic.
Wesley, there's a question from Robert who asked, what do you recommend, I guess they're talking about renewals. What is your recommendation to start a renewal or renewal discussion if you have to renew your cyber insurance?
I would say start it early. Yeah, start it earlier than you think you need to start. We consistently are moving this conversation further and further back. So for example, we used to talk to clients 90 days out from the renewal. you know, now it's 120 days. If the client's big enough and I know there's going to be a problem, it's 150 days I'm reaching out. I think the reason we're doing that as well is that not all of these things can be done overnight, right? So if you don't have multi-factor authentication right now or a proper instant response plan, and I reach out 90 days in advance of your renewal, you might say, well, I'm not going to have that in time. And now your renewal is going to be far more difficult, maybe far more expensive, maybe it won't happen at all. So, you know, we're touching base with clients kind of throughout the year and making sure that these things are on their radar. And so, yeah, I just say, yeah, that's my biggest advice is start early. Start as early as you can. Try to have these conversations well before filling in the application and just going out to try to get insurance, you know, because like I said, insurance should be the last step of this process. There's a lot of risk management to be done prior to insurance.
Actually, another question came in from David and asked, what has been the average premium increase this year?
Ooh, that'll really depend on your industry, and it'll also depend on the company you're with. There is a lot of variation in the industry. You know, I've seen as low as flat, and I've seen as low as 5 to 10%. That's, you know, maybe because the cyber insurer got big premium increases the years before, and your broker's maybe doing a good job of messaging that. You know, we're seeing anywhere, I think the average probably is 35 to 50%, maybe on that average, if I had to guess. And then, you know, we're seeing multiples though, like, so we're seeing for the tougher to place industries, you know, things like healthcare, things like energy, you can see it be 100%, you can see it be 200%. And I think the key point there as well is if you don't have some of these check boxes, you can just see it that they won't offer it at all as a renewal. They'll just say 60 days out that we're not going to give you terms if you don't do these things. And, or, you know, our internal scanning of your infrastructure found these problems. And if you don't do something about it, we're going to, you know, not offer you the coverage again. And so, yeah, and averages are tough in this space, I think, because they're all over the place, right? So it's really going to depend on your industry. But yeah, if I had to guess, it's probably 35 to 50%.
But interesting, you just answered a question that Michael had is, you know, what are the reasons some organizations are being rejected by cyber insurers, right?
Yeah, so it's these things. It's also it's these underwriting requirements. It's funny that Sergio, you brought up kind of the intersection between insurance and IT right now, and it's funny because a lot of insurance companies that offer cyber own their own IT infrastructure now. So they bought companies that do this scanning so that they could use it to inform their decision making.
Right. Yeah.
Right. So they are, when you send the submission or you approach them for cyber insurance, they're typically doing some kind of external scanning of your network and seeing what they can find, seeing whether or not, if they can find it, they know the criminals can find it quite easily.
Yeah. Yeah.
Right. So that's I'd say one of the reasons that, you know, you'll see these recommendations that say, hey, we found these things. And you'll have clients come back and say, well, who gave them the permission to do that? And it's like, well, they didn't need it. You know, that's publicly available.
Yeah.
You know, scanning. That's not. No one gave them the permission to do that. But it also means like the criminals can also see those ports. They can see, you know, these remote desktop protocols. If the insurance company can see it, so it's interesting. I've had clients, or we've had clients say, isn't that an invasion of my privacy? And say, well, you know, maybe yes and no, but would you rather have them do it than, you know, you're kind of lucky it hasn't led to a worse result at this point. If the insurance company is the only one doing it, then I think you're fine.
Yeah, plenty of free tools on the web for you to check certain domains and find out, you know, where you can get in and what's open. It's unbelievable.
Well, and yeah, like there's chatter on the dark web. There's chat rooms on the dark web for these criminals where they will talk about companies, and they'll say, they'll put lists up. You know, we've seen this where even, you know, for an industry, they'll say, oh, these are the list of companies we're going to hit with the ransomware attack. And these are the ones that we scanned and found that they have this remote desktop protocol open. So it's truly kind of disturbing that it's effectively like social media for cyber criminals, that there's chat rooms for this, and that it's so prolific that there's enough of a community there that they're talking about it, and they're, you know, doing this scanning on a regular basis. So, but yeah, and I mean, as well, there is other reasons why people can't buy cyber insurance. Sometimes it's your industry. Your industry can be tough. You know, if you don't I'd say essential infrastructure right now is a really tough industry to place the insurance for, right? If you are essential to the operation of the, if you're a food processing facility or, a pipeline company, or, you're feeding into kind of the national security of your country, then it can be tough. You just have to have better posture around cybersecurity. You can still get the insurance. You just have to be a little bit better. You have to be sort of best in class as far as what you're doing. I think so. The last slide here, if we go to the last slide before we open it up for any other questions. This is just to point out that so we've been talking about cyber insurance this entire, almost hour. There is another policy that will respond to these claims, and it's a crime insurance policy. And, the key thing to know here is that the two policies can respond to the same claim. The difference can be whether or not the criminals focused on data, so whether they remove data or encrypted data, or whether they actually focused more on, phishing attacks and willingly sending money somewhere, or, trying to hit vendors with a money request. And the key thing to note about this slide, if you kind of follow it around, this is kind of a typical claim example where the only difference in which insurance policy is going to respond is what the criminals decide in the last step of their process. And the important thing to remember is that, these criminals have been in your system for probably 287 days at that point. They're probably going to do both at the same time. They're probably going to encrypt data and also try to withdraw some money, send phishing emails to your vendors, hit you with both at the same time. They're savvy enough to know that they can get away with both, and there's two policies that'll respond to that separately. So crime policy is its own thing. Honestly, it's a lot easier to buy a crime policy, so it's just something that your risk management provider should be bringing up, that everyone talks about cyber. There's another policy out there to cover this, and it should be talked about in tandem with your process. If you buy one and not the other, you should be asking why. And then I think that's it. I think, Maria, the next slide is just questions. Any questions?
I think we lost you there.
Oh, can you get my back?
Oh, there you go. Okay.
Am I back?
We're losing you, Wesley. I'm not sure what's going on there, but yeah.
Can you hear me now?
Yeah.
Yes. Yep.
Yeah.
Yeah, perfect. Yeah.
Okay.
No, I don't know how much. Did you miss any of that, or is the next slide's just questions? So whatever questions we didn't get to in this presentation, that's where we can kind of open it up. But was there any other part of this slide that was missed there?
No, I think I made your point, if I'm not mistaken, so that should be good. I'm just gonna make Sergio the presenter, and so we can finish that off. But while we do that, there was a question that came in from Amir asking, how do insurance company assess risk? Like,
yeah, I mean, it's a great question. For cyber specifically, there's a whole bunch of different ways. Insurance companies are essentially just data aggregators. They are data-driven companies, and so in the background, how they price risk is based on data. So they will look at their loss experience with certain industries and their loss experience with certain types of companies. And so they'll get quite granular, right? They'll say if you are a manufacturer with less than $250 million in revenue with Canadian exposure and no US exposure, this is broadly the bucket you're in. And then after that, you start layering on things like controls. You start layering on all the things that we're talking about here, like, well, okay, you're generally speaking, this is what your risk is, and we're going to price it like this. But then if you have proper endpoint detection and response, it gets a little bit better. If you have proper data backups, it gets a little bit better. Proper people training gets a little bit better. So, it starts off in kind of these broad buckets where they say these industries are problematic, these industries are not. And then every time you do something to improve your risk, your pricing gets a little bit better. And your broker should be navigating that for you and telling you what makes you a better risk, right? That's why focusing on the risk management and not the insurance, the insurance is the last step. I think you need to do these other things first, and then your price will be better. Your product will be better if you do these other things first. And focus on what makes you a better risk.
Okay. Sergio, do you want to just finish that off?
Yeah. So remember, I told everyone to take a mental picture. I actually took a picture of Wesley's slide so that I have it as reference. And here is an example of what we call the 6 layers of security, our onion, if you want to say it. These are the typical solutions and services that you can put in place. Obviously, it's a little hard to put them all in place, but there are certain things that are a bare minimum. We've been preaching them for years. And if you notice, for example, in section 1 under the people, first 2, cyber awareness training and phishing simulation, is right on Wesley's list for employee training. Multi-factor, MFA 2FA is on Wesley's list. What else are we looking at here? Wesley had patching, so you'd see that on number 4 under endpoint. So you have endpoint detection and response and patch management. He had incident response, which is point 6. There was backup, so backups, and not just backups, but encrypted backups, replicated, offsite, all of that. And even on as far as this section 3 under the network, where the segmentation. So obviously your backups segment your network properly so that in case they get in, well, they can't go across the board, right? Try to contain them. So there's a lot of things that, some of them are the bare minimum, but there's a lot of things you can put in place to reduce the risk and obviously make it a lot easier to find a cyber insurer for your business. And these are all things that the MicroH can help you out and help you put it in place. Like Wesley mentioned, it's not something you could put within X amount of time. Within a month, I'll put 5, 6 services in place, but obviously we can plan this out properly. So you won't get hit with a surprise when your cyber insurance renewal comes up, or when you're trying to find one and they tell you, I can't do this because you have nothing in place, or you don't have the minimum requirements. So that was
actually,
my side.
Yeah, just that we have another question that came in from Sophie that says, how do you determine how much coverage is enough?
Yeah, so that's another good question. And it does also go back to, I think, picking the right provider, because there's good benchmarking out there. Like I said, cyber insurance companies are just good data aggregators. So they can tell you what your peers are buying if they work with the right, and brokers have access to that. They just need to know how to access it and have the right partners in place. So your broker should be doing that. That they should tell you how much limit you should be buying and giving you, we can't tell you how much to buy, but we can give you benchmarking and say, your peers are doing this. Your peers are buying this. Typically, this is the range they're in. This is the average loss in your industry. So, stuff like that. The insurance industry is all about data. And so working with the right partner, data really empowers, us to do our job properly. And so you need to work with the right company just to give you that data.
Excellent. I'm just checking to see if there's any other questions. I'm not seeing any other questions coming in right now, but that was a really good discussion. So Sergio, if you want to move to the thing, first of all, just again, thank you for joining us today. I know we're a little bit past time, but and then we got some great questions, so thanks for that. We encourage you to download the guide and reach out to us with any questions. And actually, you don't need to furiously write down that link. We're going to be sending it to you later on, like I said, with a recording. Plus, I just posted it to the chat, so if you just want to copy that and get a copy of that guide, that'd be great. Just for everybody's information, I know we have people who come to our webinars on a regular basis. We will be taking a short summer break from our webinars, but we'll be back at the end of August for our next MicroH Talks Technology webinar, and we hope to see you all there. And once again, Wesley, thank you so much for your collaboration. We have our expertise and we're glad that you came on board to share your expertise with us. I really appreciate that. And Sergio, as usual, thank you.
Thank you.
And again, thanks again to all of you for joining us, and have a great rest of the day and a great summer as well. So we'll see you again in August. Thank you.
Thank you, everyone.